Following figures and ratios are related to Company Q Limited. Sales for the year all are on credit, so there are no cash sales. GP ratio is 25%. Fixed asset turnover ratio based upon cost of goods sold is 1.5. Stock turnover ratio based upon COGS is 6. Liquid ratio is 1:1 is nothing but 1. Current ratio is 1.5:1. Receivable debtors collection period is 2 months. Reserves and surplus to share capital is 0.6:1. Capital gearing ratio is 0.5. Fixed asset to net worth is 1.2:1. Calculate closing stock, fixed asset, current assets, debtors and net worth. So practically they are asking me each and every idea of balance sheet. So let me try to draw a balance sheet over here. See, in balance sheet there will be fixed asset. There will be current assets. There are reserves and surplus also. There will always be equity share capital. Preference share capital, we will try that we find out the answer. There may be debt, there may not be debt. Alright. If the informations are sufficient to find out debt, I'll be finding out debt. And there will be current liabilities. Alright. So these are the informations which are there. Which information is directly available? None of the information is directly available. Now try to concentrate. With some figures, you can find out some direct figures. Like, if you are having no, I don't think you are having. Alright. Say, sales of the year is given 30 lakhs. See, why I am starting with 30 lakhs. It is a nominal figure. Directly the figure is available. All others are ratios. So, even if you compare two ratios, you will not be getting any answer till the time you are having one nominal figure. Start. So, sales of the year all credit is 30 lakhs. GP ratio is 25%. So, what will be GP? GP will be 30 lakhs multiplied by 25%. It is 7 lakh 50,000 rupees. Can I find out COGS? Yes. COGS is the sales minus GP. What is sales of 30 lakhs minus GP? Sales minus GP will be is equal to 22 lakh 50,000. So I am readily having an answer of COGS from first two formulas. Next, fixed asset turnover ratio. Now what is fixed asset turnover ratio? In denominator there will be fixed asset. We know turnover ratio. If you are finding out fixed asset turnover ratio, fixed asset will be in denominator. What will be in numerator? Sales. But concentrate. Here it is written that it is turnover ratio not based upon sales, it is based upon COGS. So I will be taking COGS divided by fixed asset will be is equal to 1.5. I am having answer of COGS 22 lakh 50,000 divided by fixed asset is equal to 1.5. So fixed asset will be is equal to 22 lakh 50,000 divided by 1.5 is 15 lakhs. So I got one answer. Which answer? Fixed asset of 15 lakhs. Alright. stock turnover ratio based upon COGS is 6. Now what is stock turnover ratio? In denominator there will be stock. No, there will be average stock. In numerator, you can take sales, you can take COGS. Normally what you take, if it is available, is COGS. Will be is equal to 6. I am having an answer of COGS? Yes. 22,50,000 divided by 6 will be is equal to average stock. 22,50,000 divided by 6 is 3,75,000. Is average stock. Can I write down average stock over here? 3,75,000. The answer is no. Can anyone help me out? Why I cannot write it down over here? In current assets, below stock, why I cannot write down below current assets? Why I cannot write down a stock of 3,75,000?
It is an average of whole year, not
Exactly, it is average stock. Then in balance sheet, how you write down with stock?
we write closing stock.
Exactly. In balance sheet, you write down closing stock and not average stock. So you cannot write down stock over here. Liquid ratio right now cannot be used because for that you require closing stock. Current ratio 1.5 is to 1, but right now you are neither having current asset nor having current liability. Receivable collection period is 2 months. So I think you can get debtors from it. Yes. Receivable is 2 months. You will have to go to that formula. Credit sales multiplied by 2 divided by 12 will be is equal to debtors. What is the credit sales? Is it given? Yes, 30 lakhs. See, now here you will not take COGS. Into 2 divided by 12. More we have done it in accountancy, this formula. But you can even solve it by turnover ratio. So debtors turnover ratio, if it is 2 months, it is 6 times in a year. 6 times in a year, and you can even use debtors turnover ratio and find out the same answer, but you will be getting same answer. Will be debtors. This will be 5 lakhs. Will be nothing but debtors. You can write down debtors at least over here. Which is one of the figure which they require. Alright. So still we have not used liquid ratio, we have not used current ratio. Receivable we have used. Reserves and surplus to share capital is 0.6 is to 1. So the ratio between these two is 0.6 is to 1 as far as these two are concerned. Capital gearing ratio. We have learned this, will be coming to this, but still this is spending. So this is spending, even this is spending. Fixed asset to net worth. Alright. Now this will be relevant for us. Which ratio is given? Fixed asset to net worth. Net worth is nothing but equity plus reserves or equity plus preference share capital. And what is the ratio? It is 1.2 is to 1. That is 1.2. Fixed asset is available? Yes. Fixed asset we have found out. 15 lakhs. Divided by equity is equal to 1.2. So 15 lakhs divided by 1.2 will be is equal to equity. Equity is equity share capital plus reserve and preference share capital if available. 15 lakhs divided by 1.2. It is 12 lakh 50,000. Will be equity. So equity is 12 lakh 50,000. I hope you understand. You can easily determine equity share capital and reserves and surplus. It will be in ratio of 1 is to 0.6. So 12 lakh 50,000 divided by 1.6 is 7 lakh 81,250. This will be 7 lakh 81,250 and this will be 7 lakh 81,250 multiplied by 0.6. It is 4 lakh 68,750. 4 lakh 68,750. Because we were knowing this ratio. What is the ratio between equity share capital and reserves and surplus? So we are having this idea 12 lakh 50,000 rupees. Alright. Closing stock, fixed asset, but we are having still n numbers of points to be covered. Yes. Fixed asset to net worth we have covered. Reserves and surplus to share capital we have covered. Capital gearing ratio. See, what is capital gearing ratio? It is debt plus preference share capital divided by equity. In this case, in absence of information, I am assuming preference share capital is 0. Now you will tell me, sir, why to assume that preference share capital is 0? Because there is no way by which we can find out preference share capital. That's all. Then, what is your debt to equity ratio is 0.5? Or we can even find out the debt if, no, we cannot do it. Alright. And the ratio of this is, capital gearing ratio is 0.5. We know the answer of equity, yes, it is 12 lakh 50,000. So debt will be is equal to 0.5 into 12 lakh 50,000. This will be 6 lakh 25,000. So debt portion will be 6 lakh 25,000. Alright. Now, try to concentrate. Can I find out answer of my current liability or current assets or net working capital? Can I take current liability over here? Current asset minus current liability. Yes. If it is on liability side positive figure, asset side it will become negative figure. This whole answer is nothing but net working capital. We know the answer of net working capital, yes, because balance sheet always tallies. So what is liability side of balance sheet excluding current liability is 12 lakh 50,000 plus 6 lakh 25,000. This is total of liability side of balance sheet minus 15 lakhs. I am getting 3 lakh 75,000 as net working capital. Current assets and minus current liability is a part of net working capital. So what is net working capital? Is current assets minus current liability. Net working capital, it is current assets minus current liability is 3 lakh 75,000. Is current ratio given? Yes. Current ratio is 1.5. So, current asset divided by current liability is 1.5. And believe me, whenever there are two equations with the same two variable, that two variable can be easily found out. You just need a technique to find it out. Otherwise, it is very easy to find out. Let me help you out. If current assets minus current liability and current asset divided by current liability is given, ultimately you can find out answer of current assets and current liability. See how to find out. Can I write down? Current asset, it is 1.5 current liability. So instead of current asset over here, can I write down 1.5 current liability? Yes. 1.5 current liability minus current liability is equal to 3,75,000. This is 0.5 current liability is equal to 3,75,000. Current liability is 3,75,000 divided by 0.5. It is 7,50,000 rupees. If current liability is 7,50,000 rupees, current asset is 1.5 current liability, so current asset will be 7,50,000 into 1.5. It is 11,25,000. $11,25,000 and 7,50,000. So what is current asset? 11,25,000. What is current liability? 7 lakh. Alright. And in outer column I have written only net working capital. That is absolutely alright. So this is current asset minus current liability is 3,75,000. But they also want closing stock. Please concentrate, we are having average stock. They also require closing stock, and believe me, it can be found out by this ratio which is still pending. What is a liquid ratio? Sir, we have never heard about it. It is nothing but quick ratio. Can I say quick ratio is current asset minus stock, and believe me, this is closing stock. Current asset minus closing stock upon current liability minus bank overdraft. Again, try to concentrate. There is no information about bank overdraft. I can exclude it. If I don't take into consideration, it is absolutely alright. What is liquid ratio or quick ratio given? Is 1:1. So this will be 1. Current asset, I am knowing it? Yes. Current asset is 11,25,000 minus closing stock we are not having upon current liability. They need to find out bank. Just a minute. Yes. Upon current liability. Are we having current liability? Yes, it is 7,50,000. This will be 7,50,000 is equal to 11,25,000 minus closing stock. So closing stock will be 11,25,000 minus 7,50,000. This is 11,25,000 minus 7,50,000. It is 3,75,000. Is nothing but closing stock. Let me verify whether our answers are correct or not. We have got the answer. So try to understand, sometimes even the methods might differ. There is nothing like this is a standard method. They are just equations. What should be your target is to get a correct answer, whatever is given from the ratios. Sir, in practical life, we will be doing this? No. In practical life, you will be practically having balance sheet, trading account, profit and loss account. And you will be finding out this ratio and you will be interpreting this ratio. But what is asked is more of mathematics in intermediate examination. That is, some ratios are given, based upon that ratios and your understanding of balance sheet, you just need to find out the remaining answer. Yes, taking assumption is somewhat weird, because say, when I say you should ignore bank overdraft. It is easy for me, but it is not very easy for you in examination. But try to understand. If there is no information about preference share capital, if there is no information about fictitious asset, if there is no information about preference share capital, it can be assumed as 0 if there is no other information which can find out that answer. So in that case, some of the points, you will slowly and gradually, you will be doing total 24 sums, including classwork and homework. In that 24 sums, practically you will understand that which can be taken as 0 in absence of information. What was asked? Closing stock we have found out. Fixed asset we have found out. Current assets we have found out. Debtors we have found out. Net worth we have found out. It is 12,50,000.